Thank you, Raleigh, for the wonderful introduction. Thank you, Yana, and everyone else over at TradingPub. It's a pleasure to be here this morning, and I'm looking forward to a great trading session. Today, we're going to talk about how to trade binary options, and I'm going to show you a few opportunities that I'm looking at this morning. If you are new to binary options, then you should definitely take a look at them. I have to admit, at first, I was a little skeptical. Because at Rockwell Trading, people are asking us questions about all sorts of markets all the time. What do you think about penny stocks? And I got a question about medicinal marijuana penny stocks the other day, and you just get so many questions being in this industry. And most of the time, when someone's saying, "Hey, you got to check out this market or this type of trading," you're a little bit skeptical. But I've been looking at binary options for a good year now. And I'm really excited, and I want to share that with everybody here today. So we're going to talk about briefly what binary options are, how to trade binary options, and I'm going to show you how to enter high probability trades using a setup that I use for my trading, and one that you'll find gives you a high probability setup based on the outcome that you're looking for. Real quick, it's important to understand that trading does involve risk. Futures and options trading is large potential rewards, but also large potential risk, and you must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Don't trade with money that you cannot afford to lose. This course is neither a solicitation nor an offer to buy or sell futures or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this course. Past performance of any trading system and methodology is not necessarily indicative of future results. And one of the things that I think draws so many people to binary options is that you could get started with $100. You could fund an account with $100 and start trading. And so there is a tendency to attract gamblers and people who just want to try and start out small and make millions. And I think that this is a very important disclaimer, but it also, if you take it to heart, it will help you as a trader, because trading is about risk and you're searching for that reward, but you can't overlook the fact that risk is involved and losses will occur. So if you're not trading with money that you cannot afford to lose, you're already putting yourself in a better position as a trader mentally and emotionally, so you can find opportunities, you can trade a plan and have more confidence in it. So with that said, what are binary options? Well, they're often referred to as all or nothing options, because when a binary option expires, it is going to have a payout amount, and with NADEX Binaries, that payout or settlement is $100 if you are correct, and it's $0 if you are incorrect. And so it addresses, they say it's a yes-no proposition, because if I was to ask you, do you think that the S&P today, at today's expiration, is going to be trading above 1950? If you, based on your analysis, believe that even the S&P was going to be trading above 1950, then you might want to buy a binary option. And if you bought that option, and if you were correct, then with NADEX binaries, the payout, or what you would get, is $100. So if you were incorrect and the S&P was below 1950 at expiration, and you bought a binary at 1950 saying that it would be above that price point at today's expiration, then you would lose the price that you paid for that option. So why trade binary options? Well, when it comes down to it, I've traded equity options for years and I love them. And there's so many sophisticated and complex, different setups you could trade and strategies that you could use, and you could have multiple legs to create these crazy risk graphs. Binary options are very straightforward and they're easy to understand. So I think that they're great for a beginner trader, but they're also a nice complement for a more advanced trader with other strategies and markets and tools that you might be using. Another nice thing is that the most you could lose on one contract with NADEX binaries is $100. Now, that is almost always going to be less than $100, because you'll find out today what the risk and the reward is on that trade. But if you buy an option for 50 bucks, then that's the most you can lose. So the risk is capped, and that's the bottom line there. So you're not going to have a situation where you're stuck in a trade and it goes significantly against you, and you're panicking and you're trying to figure out how to get out of the trade. If you're completely wrong and the market goes against you 100 points, the most you can lose per contract is what you paid if you're an option buyer. Another nice thing is, instead of just trading like Forex, where you're stuck trading certain currency pairs, you have different markets available and at your disposal. So you have the ability to trade indices, U.S. indices, markets overseas like the DAX. You can trade currencies if you want, euro versus a dollar, pound versus a dollar. You can trade commodities like gold, crude, and you can even trade events. So there's many traders that I work with where they say, hey, I know that non-farm payrolls are going to be better than expected this next release, and then the markets do exactly the opposite what you think they would do. But if you're right about the event, you can even trade binaries on specific releases like that. Understanding NADEX binaries, this is my preference, and it's an option for U.S. traders. With NADEX binaries, you're trading directly on the exchange rather than against your broker. So your broker really doesn't have any interest, or when you're trading through NADEX, there isn't a broker that has a financial interest in you losing money. Instead, the NADEX trading platform, they are collecting fees based on the transactions that you're making. You're trading against other traders. I think that's a much more fair and transparent market. You also have hourly, daily, and weekly contracts for multiple markets, so you can choose the time frame or the time horizon that you want to trade, and it's CFTC regulated, so you know that there is a certain level of regulation and confidence in trading with NADEX. Just real quick, there was a question on Marcus. And Marcus and I were both set up to be here this morning. This morning it will be me. I hope nobody's offended by that. I'm the better looking one with less hair and a little bit shorter. But sometimes people get confused between the two of us. Once you see us together, you'll know that we might be a great duo, but you will not be confused any longer. But for me, it's going to be just me today. I hope that's okay with everybody. Saw a few questions coming in there. So U.S. markets are going to open up in a couple of minutes, but just to cover a couple more things here. With the binary option markets with NADEX, you have indices, and so any type of derivative, and a binary option is a derivative. So it's a vehicle that is based on an underlying asset or market, like the E-mini S&P. So you don't just trade the E-mini S&P through NADEX, because that's something that's offered through the CME. They have what's called the US 500 as a trading vehicle. The US 500, what it does is it derives its data from the E-mini S&P. So in essence, you're trading a derivative on the E-mini S&P, but they rename it the US 500 because of what it is. The Wall Street 30 represents the E-mini Dow, US Tech 100 represents the E-mini NASDAQ, and the US Small Cap 2000 represents the E-mini Russell. You also have commodities like crude oil, natural gas, gold, silver, copper, and other currencies. So what you're asking when you go to create a binary option, so there's a couple of questions on my microphone, and let me see. Okay, is this better? I've switched to, I've made sure that it is not coming in through, okay, sorry about that. I thought I had the right microphone, but I guess I was talking through my computer. Perfect, thanks for the feedback, everybody. Okay, so binary options,
basically you're asking yourself, are you bullish or bearish the market? You need to make a decision on what you expect from the market. So when you go to place your first trade, and if you're buying your first binary option, just covering the basics here, buying at the offer is what you want to do, also known as the ask. Now, this is where, before you go to place your trade, you'll know exactly what the max risk and the max reward is on that position. Because if you're buying a binary option, and here, based on what I took yesterday, this was a 1943 strike expiring today at 4:15. And to buy this binary option, which meant that you believed that the S&P was going to be above 1943 at today's expiration, then you would pay $60. Now, because the payout is $100, then what you pay in this case is your max risk, and your max profit is the difference between what you pay and the $100 payout. So in this case, if you were right, then you would receive a $40 profit on that trade. Now, we also see here the NADEX indicative index at 1944 3/4. So basically, it's $60, or it was $60 yesterday to buy this option, but the market was trading above 1943. So what this is it's actually the probability when you're getting these prices and bringing up binary options. It's really just a pure probability based on people's expectations. So like that 60 is basically saying, hey, there's a 60% chance based on the interest in this binary option that the S&P is going to close above 1943. Now that changes throughout the day, but that's essentially what you're looking at here. Now, if you're selling your first binary option, you could sell at the bid, and here if you were to sell at 54, now your max profit is the price that you sold at. The max loss is the difference between 100 and that price that you sold at. So in this case, if you were to sell at 54, and because you were bearish, you believe that the market was going to close below this price, then your max profit is the price that you sold, and the max loss is the difference between 100 and that price. Here, the 54, you have a slightly better chance, slightly better than 50-50, but we're trading above 1943. So you could look at that and say, hey, this might be a good trade to place. So NADEX binaries always settle at 0 or 100. And when you're a buyer, the max risk is the price that you paid. The max reward is $100 minus the price that you paid. As a seller, your max risk is $100 minus the price that you received or that you sold at. And as a seller, your max reward is the price that you sold at. So this is how you trade binary options. You select the market, you select the direction that's expected, you select the best expiration based on your assessment or strategy that you're using. You could trade an hourly, an end of day, or an end of week expiration, and then you select the best strike price. You want to buy a binary if you want price to be above the strike price at expiration. You want to sell a binary if you believe or want price to be below the strike price at expiration. Now, this might be pretty straightforward, but then when you look at those steps, you're probably wondering, well, what do I really do? And this is where, since binary options are based on probabilities, I believe the easiest way to trade binary options is to use probabilities to find the best setups to trade. I mean, binary options are pure probability play. So use probabilities. And it could be that you've traded a strategy for the last couple of years and you have certain expectations from that strategy, winning percentage, what it produces. Maybe you're looking at new strategies like a moving average crossover breakout strategy, and you expect it to be accurate 60% of the time. I mean, use those probabilities to your advantage. My favorite thing is to use a strategy that I've developed called the power crossover method. Now, the power crossover method in the past has been used solely to trade trade stocks and options, but I found that using the power crossover method indicators and the idea behind the power crossover method, that I can know the probability that the market will close above or below the previous day's close before I place a trade. So we'll look look at the power crossover method, and then we're going to look at a couple of setups to consider today. The power crossover method, I'm relying on buy and sell signals based on this strategy. And I'm using daily charts for the type of trading that I'm doing to identify the potential for the market to close higher or lower for a given trading day. Now, as we look at the charts, and I show you what I'm looking at, there's three key things that I wanted to clarify, because I know if you've never used this strategy before, or you've never looked at a chart with the indicator set up and everything, it can get a little confusing. So by definition, a trend day, if I refer to a trend day, that just means that all three power crossover indicators are confirming the trend. So all three are bullish or all three are bearish. So a trend day is not when you have two bullish, one bearish, or one bullish, two bearish. A trend day means all of the indicators are confirming the trend. And I will also mention if triggered. Now the trigger is important because the trigger will increase the odds that the market will be higher or lower on that day. And a trigger means that price traded above the previous day's high if we are looking at an uptrend, or below the previous day's low if we are looking at a downtrend. So that's what trigger means, and if triggered will improve the probability, give you more accurate numbers. Trend continues is what I'll refer to sometimes, and just by definition, so we're on the same page here. If I say the trend continues, then that means that in an uptrend, the close is above the previous day's close. So you're closing at higher highs. If it continues in a market that's moving lower, then I mean that the close is below the previous day's close. So you're making lower closes. That would be what I consider a downtrend based on the chart and what we're talking about today. So let's look at the charts. And while I'm bringing up the charts here, there was a question, isn't it all a probability play? It is a probability play, Wolfgang. And Joel says many traders trade with feelings that it will go up or down. I mean, that's, to me, that's exactly how you can get suckered into binary options and struggle. Because if you just have a feeling that the markets are moving up or down, then you're really just gambling. You're not putting the odds in your favor. You're not using a strategy. You're using your gut. And I think that's when people really just are throwing their money at the markets hoping things are going to work out. Now, if trading with your gut and by feeling has produced a considerably impressive track record for you, if it ain't broke, don't fix it. But for most people, they're emotional about it, and once they have a losing streak, they question everything and change everything and mess everything up. And if they have a winning streak, they are completely overconfident. So this is a chart of the E-mini S&P, and what I've done is I've programmed the indicators. The indicators are based on stochastics, RSI, and MACD. And when I have a crossover, according to the downtrend rules, I've programmed it to show red bars. So like in this move here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 red bars. Now we're starting to see black bars. So yesterday, the E-mini S&P, what happened was RSI crossed back above 50. And so we no longer had all three indicators bearish based on the rules. So this was not a trend day. So yesterday was not a trend day. But going into it, we had a pretty nice downtrend for a couple of days. Now, let's zoom in here a little bit. And let's talk about the rules. So all three indicators bearish produces a red bar, and the red bar to me, it just visually makes it easier to see things. So I could look at the far right of the chart and I don't have to analyze the indicators themselves, but you don't need to have the color coding. Now what I would expect then, if let's say that this was yesterday's trading day, we have a red bar, so we say the markets are bearish based on our rules. Now, if the market gaps higher and just starts to drift up, then this could be a downtrend identified by the indicators, but not a triggered downtrend. Because what I'm looking for on the next trading day is that we take out the previous day's low. So the previous day's low on this bar was 1923.50. And that would mean that if we trade at 1923 and a quarter, it's going to let me edit it. Doesn't want to let me edit. Oh, there we go. I'm just trying to do too much on my machine right here. But anyway, 1923 and a quarter would mean that we have traded through the previous day's low. 1923.50 is the previous day's low. Let's try it one more time. There you go. Okay, so indicators, bearish. If we trade through 1923 and a quarter, we have a triggered scenario. Now, why does that matter? Well, I find that if we have a triggered scenario, then 77% of the time, the market is going to close below this day's close. So here on this day, if we go over a bar, we see that on the next day, we traded through that downtrend day's low, and the close on this day was 1918.5. So we closed below the previous day's close. Now this is the thing that's pretty nice about binary options, because if we were just trading futures, the E-mini S&P, each tick's worth $12.50. And so if we knew that there was a 77% chance that the market was going to close below the previous day's close, we could use that information to place a binary option trade. But what we don't know is how much lower the market is going to close below that previous day's close. It could be 20 points below. It could be 2 ticks below. And that would be, it's the difference between $1,000 below and $25 below. With binary options, it doesn't matter how much, just that it's below the the strike price that you've selected. So when you're trading options in general, you have to be right on time, direction, and how much as an option buyer. With binary options, you have to be right on time and direction, but how much doesn't matter at all. So you really only have to be right on 2 of the 3 things that you need to be right about when you're trading other markets. Not too bad, makes it a little easier. So on this day, here we see that we still have a downtrend day. So this is a trend day based on our definition for a trend. And then on this trading day, we see that the market gaps higher and it closes above this day. So we had a downtrend day, but this is why the if triggered is so important, because to have the setup triggered, I want to see the price trades through this day's low. This day's low is at 1910 and a quarter, and on the following day we got to 1914.75, and that was about it. So this trade was not triggered, and we see that we close above the previous day's close, but this is not a scenario that I would trade because it was never triggered. On this day, the low of this day was 1914.75. So right here is where I want to see the market triggered. It would be 1914.5, but we could just agree that we're seeing the same thing here, and it doesn't really matter. So on this day, the setup is triggered, so that tells me that there's a 77% chance we're going to close below this day's close, and we close at 1913, so it worked out just as we would expect it. On this day, it's triggered because we gap down and we close above the previous day's close. So this one did not work out, but this is exactly what we're looking at when we're looking at these trades. This one is triggered, it closes lower. This one is not triggered, it closes higher. This one, not triggered, closes higher. This one, so this was 2 days ago, triggered, closes lower like we would expect. and then yesterday we gap up, and we no longer have a trend by definition. So I think we're about 5 out of 6. 5 out of 6. And like I said, 77% of the time, that is the outcome I'm looking at if we have a trigger and if there's a trend on the previous day. A couple of questions on it working on MT4. You know, to be honest, I did not use MT4. I'm really not too familiar with it because in general it's a Forex trading platform. But to trade binary options and to do this analysis, I'm looking at futures contracts because the futures contracts are what the binaries are representing. However, there are also Forex contracts that you could trade with NADEX, and with the Forex contracts, I am not really following the Forex contracts. I have the same, you know, the probabilities, the same ideas can be applied. But for you Forex traders and MT4 traders, you could take the same ideas and instead focus more on the currencies rather than the other markets with the binary options. Does that make sense? Okay. So let's just look at an uptrend real quick, and then we'll go back and we'll look at the NADEX platform and see if there are any trades that we need to consider. I mean, here we have green bars, so that means that all 3 indicators are bullish based on our rules. On this day, 1978.25 was the high, so we actually needed to get above 1978.5, and that does not happen. So in an uptrend, we need to take out the previous day's high, and taking out the previous day's high does not happen. We close below the previous day's high, or close, excuse me, so this trend does not continue, but it is not triggered. On this day, all 3 bars bullish, and the high of this bar is 1976.25. So we wanted to trade above that, 1976.5 on this day. Does not happen, and we see that the market's starting to drop. So on these days, I would not have a setup according to my rules, and it's perfectly fine because the trend did not continue. So let's go back and look at a couple of slides, and then let's look at some setups and bring up the NADEX platform. So these are the probabilities that I'm working with and that I expect based on the rules that we just went through and discussed. The E-mini S&P, day after a trend day, if triggered. So previous day, bullish or bearish. Triggered in an uptrend, we take out the previous day's high. In a downtrend, we take out the previous day's low. Based on that criteria and those rules, using power crossover indicators and the method, I expect that the E-mini S&P, the trend will continue 77% of the time, meaning that we will close above the previous day's close if there is a triggered uptrend. We will close below the previous day's close if there is a triggered downtrend. And it just so happens that these numbers are the same. This is going back years. This is using years of data that we've analyzed here. The mini Dow, day after a trend day, if triggered, taking out the previous day's high in an uptrend, previous day's low in a downtrend, the trend continues 77% of the time. The NASDAQ NQ, day after a trend day, if triggered, the trend continues 77% of the time. And yeah, Joel, we're looking at daily bars with this. I've not gone down to intraday bars, quite honestly, because this is one method that complements the other type of trading that I do. I like to use the power crossover method to identify swing trading opportunities. So I'll still look at a daily chart, and I still like to look at futures intraday. But this is something that I like to do in addition, and I think it kind of complements any style of trading because you'll find out that you could place the trades. Like, I don't have to be looking at the market at 9:31 a.m. Eastern time to place a trade, because there might be some times when we actually get in a better price later in the day, and even if there's a setup that I want to consider, if it's triggered, I could put my order in based on the probability of what I'm expecting will take place, and let that order rest in the market for the day. So those are the indices that I personally am following right now. Here we have gold, day after a trend day, if triggered, the trend continues 79% of the time. Silver, the day after a trend day, if triggered, the trend continues 76% of the time. Copper, day after a trend day, if triggered, the trend continues 80% of the time. Crude oil, day after a trend day, if triggered, the trend continues 79% of the time. Natural gas, the day after a trend day, if triggered, the trend continues 80% of the time. Corn, day after a trend day, if triggered, the trend continues 77% of the time. Soybeans, day after a trend day, if triggered, the trend continues 75% of the time. So you see here that based on those rules and those conditions, and looking for the trigger specifically, we're looking at about a 75% to 80% probability that an outcome will take place. And that's something that, like, from a percentage standpoint, that's a workable percentage that we could make some assumptions on, and that we could base a trade on. And I mean, we've analyzed thousands of trades, so this isn't just like a flash in the pan. It worked last month. I mean, we're going back years, and we see this type of data. So we could use this information to place trades, and that's exactly what we want to do. Now, we talked about what you need to do to trade binary options. I mean, these are the 4 steps. But if you are putting probabilities on your side, and I mean, it could be any other strategy that you guys are comfortable with, that you've worked with in the past. You could use the same ideas here, but now it's easier to select the market because I know exactly what conditions I'm looking for. I'm looking for an uptrend or downtrend based on the power crossover method rules. So selecting the market to trade is now on autopilot because there is a trend or there isn't. Selecting the direction based on the rules, now it's easy to determine, do we have an uptrend or downtrend in that market? And then the expiration. Since I'm using dailies and all of this analysis is on dailies, I'm going to trade the expiration at the end of the day. So I know that there are a couple of questions on intraday, but I'm using this purely to select the end of day expiration. So what I want to do then, the next step is, what strike price do you select? And what I'm looking to do, if there's an uptrend, I want to choose the strike that is closest to the previous day's close. Ideally, it has to be below or equal to the previous day's close. In a downtrend, I want to select the strike that is greater than or equal to the previous day's close. Because again, based on our assumption and our analysis and the setup that we're using in an uptrend, we expect that 75 to 80% of the time the market will close above the previous day's close. So we want to strike equal or below that point to guarantee that the strike is where it should be, or that if the probability the trade will be successful. Now, just to account for fees and just help us from the probability perspective, what I also like to do is try to buy or sell for $5 better than the probability. Because with NADEX binary options, you're paying 90 cents a trade to get into a trade. And that's less than 1% of the potential payout, because if the payout's 100, you're paying 90 cents. Now, if you find that binary options are your thing and you want to be a bigger trader, then the trading fees get much better for you if you're trading more than 10 contracts. Basically, there's no additional fees. So for larger size, you're good. But you're paying 90 cents to get into a trade. Now, if the contract settles out of the money, meaning that you did not make money on the trade, then you don't get dinged again by NADEX. They don't charge you for losing money on a trade. But if you have a winning trade and you were successful, the probability was correct and your trade was successful, you pay 90 cents for settlement fees. So basically, if you have a winner, you're paying 90 cents to close the trade. If you have a loser, you don't pay anything on the close. So here's an example. Selecting a market. Let's say that the E-mini S&P is in an uptrend based on our power crossover rules. So I would use the US 500 in NADEX. Select direction, uptrend, select expiration. I'll use a daily expiration. Select the strike price. If the previous day's close was 19.50 and a quarter, then the strike price I want to select is 19.50 or less if I'm expecting an uptrend. And if I should have had the probability at 77% here, but what I meant to say here, well, let's use 72% just so there's no confusion. If the probability of the market closing higher or lower based on our analysis is 72%, I said I want to buy or sell the option $5 better. So I would want to buy the option for $67. And that will account for those additional fees and just give me a little more wiggle room. So even though the probability that the market might close above that strike is 72% in this example, I would want to pay $67 or less to take the trade. So let's bring up the NADEX platform and let's look at a couple of trades. And actually, let's go back to the charts here because we need to see what setups are setting up today. If I look at crude oil, the previous day, so this is yesterday, we had a downtrend based on our rules. The low of this bar was 96.75. So we're getting close here. We haven't taken out the previous day's low, but 96.75, basically at 96.74, we go to 96.74 or lower, then we'll consider a trade. So crude is one we want to watch. E-mini S&P, yesterday RSI popped above the 50 level and we see that we have a black bar, so no trend day. So ES is not going to be a setup to consider today. Let's go with gold. Gold, this was the prior trading day. Here we have 13.16.4 being the high of this bar. So 13.16.5 would trigger the setup, and that happened today. And so based on today's triggered trade and the probability that we just looked at, we expect that today will close above 13.14.7. So this is another one we're going to take a look at. Copper. Copper, the low of this day was 13.11, so 13.10.95 or lower is what we're looking at to trigger the trade. It triggered, it's trading lower, so this is one we'll take a look at today. Natural gas. Natural gas, the trend day, we did not have a trend day yesterday, so natural gas is not something to watch today. E-mini NASDAQ, we no longer have a trend day on the E-mini NASDAQ, so it's not something we need to look at today. Silver, this is the low of the prior session, 1370, and we have not taken out that low, so although it's one to watch, it hasn't triggered yet. The Russell, yesterday we had an uptrend day on the Russell, and the high was 1141.9. So 1142 is where we need to trade. And we did that today. So the Russell is one to take a look at. Mini Dow. Yesterday, no trend day. We could take that off of our list. Corn. No trend day yesterday. Looks like it's starting to set up a little bit for today, so it might be one to watch tomorrow. Soybeans. Soybeans, no trend, and nothing to watch. So let's start with the ones that were triggered. Let's see, crude oil. And while we're taking a look at the chart here, there was a question about getting your winnings back. And Rick, I think that this is, especially if you are in the US, why you should use NADEX, because some overseas brokers, I've heard that is a challenge with some of the binary options brokers overseas. But with the NADEX being CFTC regulated, and with there are those safeguards there. Okay, so crude is one to watch, but it hasn't set up yet. So we'll watch CL. Gold is something we want to take a look at right away. Copper was another one that we want to take a look at right away. Although it's starting to pull away a little bit, we'll see if we could get a good price on that one. Silver, I think that it's one we'll watch, but we don't need to worry about right now because it hasn't triggered. The Russell triggered and is good. All right. So let's bring up the NADEX platform. So here we have the NADEX platform, and the first one we want to look at is gold. So, and you could set it up where you have different watch lists and everything, and this is just the basic layout when you first bring up the platform, but you could set it up to just show the markets that you want to follow. So we'll click on commodities, and we want to look at gold. So we'll click on gold. We're looking at the daily expiration. So the gold expiration is at 1:30. So we're going to click on that. And this is where we need to know the previous day's close to select the strike price. And I have that written down. The previous day's close was 1316.5. So gold is in an uptrend, which means that we want to buy the binary that is as close to that as possible, but below the previous day's close. So that would be 1314. So 1314. Oh, I'm sorry. The trigger was at 1316.5 in gold, and the previous day's close was 1314.7. So 1314 is perfect. This is exactly what we want to see. Now, based on our probabilities, we're looking at a 78% chance that gold will close higher today, based on our rules. So that means that if there's a 78% chance, remember, I want to buy it at least $5 better. So that would mean I want to buy it 72 or better. Now, if I bought it 72, let's just right now let's say we want to buy at the offer at 60. It was 64.50. See, if I buy at the offer, it tells me what my profit and loss will enter a size of 1. So with one contract, if I bought at 64.50, my max loss on this trade is 64.50, and my max profit is 35.50. So we're risking more than we're looking to make on this trade, but based on our analysis and belief, there's a 78% chance that the market will close above the strike price. So if we give ourselves $5 or better, then if the probabilities hold, and if we don't get too far away from them in the long term, we have an edge. So right now, with us trading between 56 and 62, we're doing pretty good, and this is something I'd want to consider. You could try to split the bid in the offer if you really want to, but I'm just going to put in an order at 63. That's the last time we were looking at an opportunity. So right now we have a working order at 63. Right now the offer is at 66. And I could come back if it looks like the market, like if we don't get filled in the next couple of minutes, we could amend that order and work it a little bit. But now we have a working order in gold, and we were looking to buy at 63. So that's our max risk, $63, and our max reward would be 37. Now another one that we want to take a look at was copper. Oh, we just got into gold. Okay, so we'll also look at copper. We'll look at the daily expiration, which is at 1. Now, copper was in a downtrend, and the previous close was 311.3. So I want to choose a strike because we're in a downtrend. I want to choose a strike that is above the previous day's close. And when I bring up the order ticket, we see that there's nothing in the bid size and nothing in the offer. This is because copper has made its way down. Let's bring up the chart of copper to show you what's happening. See, so I'm trying to buy, or in this case sell, excuse me. I'm trying to sell the 312 strike, which is here, right? Copper's trading at 310.15. So we pulled away from this one. So even though it has triggered, the probability now, the traders are expecting that the probability of us closing above 312 is slim to none, right? Now I could still put an order in here. So if copper starts to trade higher, I could put in an order based on the probabilities. And with the probabilities, we were looking at, with copper, it's 80%. So if I want to get in better than 80%, then I'd want to buy at 75 or better, or I'm sorry, sell at 75 or better, because I'd be able to take 75, and that would be my max profit. Actually, what we want to do is this. There we go. Okay. So we have a working order for copper, and the other one we want to take a look at is the Russell. So let's bring up the Russell. So the Russell falls under the indices, binaries, and the name for the Russell is the US Small Cap 2000, and yesterday's close was 1140.2. We're going to select the daily, and since it's in an uptrend, we want to get a strike that is as close to 1140.2 as possible, but below if not exact. So 1140 would be the best option. Here's our order ticket. Now, right now we're trading below 1140, so we're actually in a option fairly cheap based on where the market's currently trading. Now, the probability that we'll close higher today is 73%. So I want to buy at 68 or better, and you see right now I could buy at 42.5. So if I'm a buyer at 42.5, this is my max loss, and my max profit is 47.5. So I'm going to go ahead and put in the order, and we're filled right away. So we have two trades working. We have gold, where we bought the 1314 strike. It will expire today at 1:30, and we paid $63. Right now, it's trading at 64, so there's a $1 profit on the trade. On the NASDAQ, we believe that the the Russell will close above 1140 today, and we paid 42.5. Right now, it's trading at 36, so we're losing $6.5. But I don't need to do anything with these. Basically, I'm going to hold it to expiration. Now, one thing you can do with NADEX binary options is if you want, you can close a trade during the day. So even though they're often referred to as all or nothing options, during the day, you can make a decision to get out of a trade. You could lock in profits or get out for a smaller loss. But since I'm using probabilities at the end of the day, I'll just hold it until the end of the day and let them expire. Now there's two other trades we want to look at. We want to look at crude oil, and we also want to look at silver. So with crude oil, we'll bring up commodities. Here's crude. And with crude oil, we were looking at, here's the daily expirations. So yesterday, crude closed at 97.57. And crude oil is in a downtrend based on our rules. So we want to trade the 98 strike. Well, actually, hold on. Let's go back here. Here we go. I'm sorry. Crude hasn't triggered yet. Now here's another thing. The reason why the trigger is so important is I was just looking at scenarios where you had a trend based on the rules. But like here, when you see these gaps and the market, not taking out the previous day's low or the previous day's high, there's a much, the probabilities definitely change. So just based on a trend day, we might have a 55% chance that the market's going to continue the trend. But if triggered, brings that up to, in crude oil, it's 79%. So that's a big difference. Yeah, you might be able to do slightly better than a coin flip, and you might have the odds in your favor long term just looking at the trend days, but the triggers really ramp up the probabilities to be something that I think that we could definitely work with a vehicle like binary options that's based purely on probability. So crude is something we can't enter an order in the market yet because we need to take out the previous day's low at 96.75. Another one that we will watch is silver. Let's bring up silver real quick. Silver, it looks like the chances. Now, I mean, silver is a volatile market. It could take off. Who knows what silver is going to do? But just based on where we're trading, I would say that the chances are rather low that silver could take out the previous day's low today, and crude oil would be the one to watch. Crude oil has a much better chance of taking out the previous day's low, and then the question is, once triggered, are we able to get into a trade that's at a price that we are willing to risk money on? All right, so I'm going to go back to the NADEX platform. Now we see that gold, we're up $3 in gold, down $4 in the Russell. Let me bring up our TradingPub, our Novia platform, because I think there were a couple of questions. So Win says, how many contracts can you trade per dollar? Like when you're trading the E-mini S&P, the value of the E-mini S&P might be 55,000. I mean, now, let's say it's $65,000. And so the overnight margin is like $4,500. So you have considerable leverage when you're trading the E-mini S&P. And day trading margin with future-specific brokers might be as little as $500. So you have a whole lot of margin, but when you go to place a trade, you can put stop losses in the market, but your risk is not capped, right? You could get in a trade and it could go against you, and that's why in the risk disclaimer it says technically you could risk more than your account. Because of the leverage and because of how futures are structured. With binary options, your risk is purely capped. It's capped if you're a buyer at the price that you paid, and if you're a seller, it's the difference between the price you sold at and $100. So you don't have that additional leverage, and what NADEX does is they will hold the max risk on the trade. So basically you're paying the max risk to enter the trade, and then if it's a successful trade, you get $100 back. Does that make sense? So like with gold, we paid $63 for the trade. You know, we bought the option at $63. We paid $63, and at expiration, we'd get $100 back if it's successful. If we were wrong about the outcome and it closes below 13.14, then the option expires at 0 and we lose the $63. And Linda, thanks for sharing a binary broker outside of the US. And Joel, yeah, what I like to do is in my trading platform here, I could just, like on my chart, when I'm running, here we're gonna get close in crude oil, but I could place an alert and just have this all running on a separate monitor, and it could play a sound. I could even have it send me an email. Like crude oil triggered short. So I could put alert and just let that run, and then once it triggers, go to the NADEX platform and place a trade. Yeah, Susan, when, like here, let's go back and let's look at one of these trades. So with binary options, when the option expires, and we could look at crude oil here, we could bring up, you'll see that there are a few different expirations that we can select. We could select the option that's going to expire at 12 noon. We can select the option that's going to expire at 11 a.m. We could select the daily option. This expires at the pit session expiration, which is 2:30, and we can select the weekly option, which would expire on Friday. So when that option expires, there are two scenarios and two scenarios only. Based on the strike price that you select, if the market is trading above that strike and you are a buyer, the option is going to be worth $100. If it expires below that strike price and you are a buyer, the option is going to be worth 0. So while we, here I'm gonna, actually we'll use this. Because we're waiting for crude oil to set up and we have a few minutes here. I could just type this out real quick. Because I think that the simplicity in binary options is great, but at the same time, if binary options and options trading is totally foreign to you, sometimes we could take for granted just how easy they are. So with NADEX binary options, oops, let me try this one more time. Yeah, Joel shares that NADEX, they have some good education videos on the website too. Let me just type this out real quick. And while I'm doing so, if there are any other questions, let me know. But see, this is the nice thing about binaries. If you're day trading the futures markets and you're trading for say the first 2 hours of the morning, right at the open, you might be pretty active. You don't need to rush if you're trading the daily expirations. You don't need to rush right over and get all of your binary options orders in the market. You could focus on the day trading that you normally do. Then when things slow down, you can consider taking a few binary option trades, especially when you're looking at the dailies. So they will expire at $100 or 0. Now as a buyer, the price you pay is your risk. As a seller, $100 minus the price you sold at is your risk. So if you're a buyer at $55, your risk is 55, your reward is 45, because the total payout is always going to be $100. You could buy a binary at $10, where your risk's $10 and your reward's 90. You could buy a binary at 30, where you pay 30, risk 30, and your reward's 70. But those will be lower probability trades. There's nothing wrong with that, but the chances of those having value at expiration are going to be lower than when you're closer to the 50 mark or higher. Now what happens is when you buy at $55.90 is deducted from your account. So up to the first 10 contracts, NADEX is going to take 90 cents for the trade, because they don't care. They're not making money if the trade is successful or not. They're not trading against you. They're facilitating the trade. They're giving you an ability to place a trade on an open exchange. Now, at expiration, if you are right on the outcome and where the market closed, $100 is added to your account, right? So when you place the trade, the money is deducted, and then at expiration, you're either going to have $100 added to your account, or the option expires at 0, and if it expires at 0, you're not paid anything. Excellent. Good stuff. Thanks, Win. No, Gio, see, that's the difference. This is a key difference between trading with NADEX and trading with some overseas binary options traders or brokers. NADEX is facilitating the process of buy and sell orders and traders in the market. So like NADEX doesn't make money on you taking a trade and being right or wrong. They take a commission based on the trade that is placed, and then settlement if the market settles at a profit. So we see here the $63 that we paid for our gold option. Right now, that option is at $55.50, so we're losing, well, now it's $54.50, losing $8.50 there. The Russell trade, we paid $42.50, and right now we're making $7 there. So right now we're at about break even. And I mean, just looking at the last 10 trades, I was right on 70% of them. I had 7 winners, 10 losses. So, these probabilities are definitely holding up. And I think that is the key here when you're trading binaries, instead of just guessing on market direction, or instead of using a strategy that you've used to kind of help you identify uptrends, downtrends, I think having a solid handle and a good understanding of probabilities is going to help you with trading binary options, since they're based purely on probabilities. And that's where we've done all of the testing on the power crossover method. And when I started to look into the way to use the power crossover method, the setups that we talked about today, it just made sense. And the probabilities were so convincing, it was just a perfect application to binary options trading. So, and John says, how do you know the percentage you've been using? That's tested on thousands of trades. It just holds up. It's the numbers that we've run and the numbers that we've tested. And so what we're doing here for today's special presentation, there's a link. It's rockwelltrading.com /tradingpub -special. And thank you for sharing that there. There's a link that just popped up. So with the DVD special, we did 2 sessions on binary options, and some of it's recapping what we talked about today, but we also talked about weekly probabilities. So if you as a trader, you also want to look at what happens at the end of the week, maybe trade some of those weekly probabilities. Sometimes with weeklies you could get in at better prices because there's more time involved. We talk about the daily probabilities. Use these daily numbers that I gave you today. Those numbers are solid. So jot down those numbers, watch the video if you didn't get a chance to and you're really interested in binary options. But what we also talked about were first trend entry rules on one of those sessions, and that's a whole concept in itself. And so it didn't make sense to address it today, but those are higher probability setups on the first trend entry, and all of that's available also with the DVD special. You get the power crossover method rules. So the power crossover method, it's a great setup and strategy, and there's a whole DVD talking about how to set up your charts, the indicators to look for, and how to get things set up the same way that I have it. And if you're new to NADEX, you might even consider opening up a free demo account with NADEX. And it's a little tricky to find the free demo account, so we provided a link here for you, www.rockwelltrading.com/NADEX. Otherwise, it's a little difficult to navigate through the website to find the free account. It's pretty easy to open an account and find the paid version, but if you want to demo it first, I would recommend going to that link. Ray says, what charting service do you prefer? Ray, I've been using Trade Navigator forever. So I have to say that Trade Navigator is my first choice. With the indicators that we use for the power crossover method, you could use any charting software. A lot of people, they do say, hey, I like the highlights, so I like the bar coloring. And if you're familiar with your charting package, it isn't too difficult to add that to most charting packages. But if you're not familiar with your charting package, it might be a little tricky. And I think it's fairly easy and straightforward to add those highlights and custom indicators in Trade Navigator. It's not always the case with some of the other platforms. Perfect. So what do you guys think about binary options? I have to admit, I was a little skeptical and hesitant, and at first I just played them off, but I'm pretty excited about them now. And part of it's the testing and what we've done here at Rockwell Trading that kind of opened the door and turned me into a fan. Linda says scary, but I'm interested. Yeah, I think the nice thing is they could be a complement to what you might be doing as a trader. So you could trade Forex, you could trade stocks, you could swing trade, you could day trade, you could trade hourly charts, and this could be that side segment, that thing where actively you want to see if a trade has been triggered, and if you wait until the end of the day, you're not going to be able to get the better prices most likely. So you want to start looking at things in the first hour or two, but you don't have to just put all of your energy and miss other good trades if you're looking at binaries in the first 5 minutes. You could, like we did today, we started looking at trades, 30 minutes into the session, and there were still, there were 4 trades that we're looking at, 2 that we got filled on, 1 that has a good chance of triggering, so I'll keep an eye on that one, and 1 that got away from us, but that could have been a move before the market's even open. It could have been that just took off lower from the beginning, and there just wasn't a good price point to enter. Perfect. Well, so again, the link, rockwelltrading.com/tradingpub-special. If you want to open a NADEX demo account, I'm being honest when I say that this is the easiest way to do so, using this link, rockwelltrading.com/NADEX. Otherwise, it's a little tricky to find the demo account option in NADEX. If you have any questions, my name is Mark Hodge, head coach at Rockwell Trading, and you could shoot me over an email, support@rockwelltrading.com. All right. Good deal. And another thing real quick here, there are a few options in the NADEX platform too. Like you could bring up charts of the underlying index. So I mean, we really and there's a lot more beyond what we talked about. But I mean, here you could have some basic charts with the NADEX platform, and you could also look up. You could bring up a binary ladder chart, the NADEX settlement index. There's all sorts of little things you could do within the platform. Create watch lists. I mean, that's what I'm most likely to do. Just have a watch list for demonstrating the idea. I think it's easy to grab from the big list